I'm going to show you the trick for remembering debits and credits using a hand game and our basic accounting equation. So we start with our basic accounting equation of assets equal liabilities plus equity. And we can restate equity as being beginning equity plus net income. We can further restate net income as being revenues minus expenses. So the basic accounting equation can be rewritten as assets equal liabilities plus beginning equity plus revenues minus expenses. In the hand game, we assign each of the parts of the accounting equation to our fingers on each of our hands. And each hand corresponds to a side of the T account. Looking at the T account and using our left hand, putting it in the form of a hang 10, and our right hand in the form of the three middle fingers pointing up, our left hand is always the left side of the T account, which is always, always, always a debit side of the T account. And our right hand is the right side of the T account, which is always the credit side of our T account. On the left side, on our left hand, our baby finger represents assets, our ring finger represents liabilities, our middle finger represents equity, our pointer finger represents revenues, and our thumb represents expenses. Just the different parts of the accounting equation. On our right hand, our thumb represents assets, our pointer finger represents liabilities, our middle finger represents equity, our ring finger represents revenues, and our baby finger represents expenses. It's like you can read the accounting equation on your fingers. So what this means is that if you make a debit entry in an asset account, because my baby finger on my left hand is pointing up, that means that debits increase assets. Because my ring finger on my left hand is pointing down, debits decrease liabilities. Similarly for equity and revenues, because those fingers are pointing down, debits decrease equity and debits decrease revenues. Expenses, my thumb is pointing up, so a debit increases expenses. We do the same thing on our right hand, except this time our right hand represents credits. So the effect that a credit has on an asset, because my thumb is pointing down, a credit decreases assets. Liabilities, equity, and revenues, these three fingers are pointing up. So the effect that a credit has on a liability account, an equity account, and a revenue account is to increase those accounts. Expenses, my baby finger is pointing down. So the effect that a credit has on expenses is to decrease expenses.